Bitcoin is following the exact same golden cross pattern we saw in 2024, a sharp dump right before a massive rally. If this recent dip has you worried about Bitcoin repeating the 2021 cycle top with a double top pattern, you might be overthinking it. Personally, I don't believe that's the case. I've found multiple reasons that support a bullish continuation, and I see this dump as a classic bull trap. In this video, we're going to break all of that down, from key charts to critical signals to the latest macro developments that could impact crypto in the coming weeks. We'll also take a look at some altcoins that appear to be gearing up for major breakouts. So if that sounds good to you, smash that like button and make sure you're subscribed. Let's get straight into it. Bitcoin had its usual post-conference dump, something we've come to expect after these big events. This time it also broke below the recent uptrend, which has understandably triggered a wave of panic in the market. Still, I believe this is nothing more than a major trap, similar to what we saw in 2024. If you recall the last golden cross setup, Bitcoin made a sharp move to the upside, pushed to new highs, and then suddenly dropped, shaking out weak hands. That drop turned out to be a fakeout before Bitcoin launched into another powerful rally. I believe we're seeing the same pattern developing again. This current dip could very well be the final shakeout before the next leg up. In fact, there's a strong chance the bottom is already in or very close. As we discussed in a recent video, Bitcoin has been tracking global liquidity closely, both on the way up and down. When we overlay Bitcoin's price action with global liquidity on a 12-week lag, we can clearly see that Bitcoin had overshot liquidity with its breakout above the 112K all-time high. Historically, when Bitcoin gets too far ahead of liquidity, it tends to pull back and realign with the trend. That appears to be what's happening now. We've seen this pattern before. A sharp move higher, a retrace, and then continuation of the uptrend. If that pattern holds, we could see some sideways movement until mid-June, followed by a renewed push toward fresh all-time highs. If the trend continues, Bitcoin could potentially reach 130K by the end of June. Let's take a closer look at the weekly chart. We've covered this scenario in detail on the channel before. Bitcoin made a massive move higher, broke through a key resistance level, and printed a new all-time high. Right now, it's retesting that same level. If it can flip that level into support, we're likely to see a bullish retest followed by continuation to the upside. That would be extremely bullish for Bitcoin. The recent market flush has actually been quite healthy. We've seen a 10 to 20% drop in open interest from its peak, and most of that has come from long positions getting wiped out. That kind of reset clears out excessive leverage. If you look at the funding rate heat map, nearly every top 10 coin has flipped to neutral or even negative funding over the past few days. This shows that the market sentiment has cooled down significantly. That is often a sign of a reset phase, where price can consolidate or even bounce with less resistance. On top of that, metrics like the percentage of Bitcoin supply in profit have come down, which historically aligns with good accumulation zones. All in all, the conditions are starting to line up for a potential rebound, especially if liquidity trends remain supportive. Now let's touch on some key macro developments, because there's been quite a bit unfolding. One of the biggest headlines is the reported in-person meeting between Powell and Trump at the White House to discuss the economy. There are also circulating rumors that Powell might consider resigning. While the details of their discussion remain private, any confirmation of a resignation could introduce fresh volatility into the markets. On the flip side, if the meeting went well and they managed to ease past tensions, that could be a net positive for risk assets. A more aligned approach between fiscal and monetary policy tends to create more stable market conditions and can lead to quicker responses during times of stress. On the data front, the latest figures show that US GDP is still contracting, though not as sharply as expected. Meanwhile, jobless claims have been climbing. At first glance, that may seem bearish, but for Bitcoin and other risk-on assets, it can actually be a bullish backdrop. Rising unemployment often increases political pressure for stimulus or liquidity measures. And historically, a portion of that fresh liquidity finds its way into crypto markets. All in all, the macro landscape is evolving quickly, and staying on top of these shifts is becoming more important than ever for crypto investors. Now, before we get into altcoins, let's ask ourselves an important question. Are we really prepared for the worst-case scenario? If you've been following this channel for a while, you know we always keep a balanced perspective. No moonboy hype and no blind doom talk. I'm not here to push personal assumptions, and I genuinely welcome different viewpoints. I still believe we're in a bull market gearing up for another major leg higher. But what if I'm wrong? What if those calling for a 2021-style double top are right? What if that breakout to new all-time highs was just a trap, like in the last cycle, and we're actually heading straight into Goblin Town? That's the kind of uncomfortable possibility most people ignore. But facing it is what separates short-term luck from long-term survival. Whether this plays out as a fake-out or a full continuation, the key is having a plan for both. That's what real risk management looks like. I've covered this topic in depth across several videos on exit strategies and portfolio protection. I'll link them at the end of this video. Be sure to check those out if you haven't already. Let's now take a look at a few altcoins that seem primed for a strong move higher. ETH is actually showing some promising signs right now. It has been gaining strength against Bitcoin ever since SharpLink Gaming announced a $425 million strategic reserve in ETH, a move that stood out because corporate reserves in altcoins like this are still very rare. Something notable happened on 29th May. While the broader market was rattled by the announcement of new tariffs, there was a significant outflow from Bitcoin ETFs. These outflows typically reflect institutional hesitation or profit-taking during periods of macro uncertainty. What made this moment stand out was that ETH saw a notable inflow at the same time, even as most assets were in decline. This kind of divergence is rare and suggests a potential shift in demand dynamics, possibly driven by growing confidence in ETH's longer-term positioning. In addition to that, the announcement of companies beginning to hold strategic reserves in ETH signals a meaningful shift in market sentiment. Traditionally, Bitcoin has held the narrative as the primary crypto reserve asset, but this development indicates that institutions may be starting to view ETH in a similar light. If this continues, it could become a strong tailwind for ETH over the coming months. From August 2024 until the February dump, ETH consistently held above its 50-week simple moving average. Following the recent rally, it has reclaimed that level and is now using it as support once again. On top of that, ETH to BTC just printed its higher low in a very long time, and historically, that has often signaled a major reversal in ETH's favor. If this trend continues to hold, I believe ETH could be setting up for a significant move to the upside. That would likely kick off the next big breakout phase for altcoins as well. SUI broke down from the highs around $4.03 following the CETUS hack, which triggered a sharp correction. Since then, it has shown strong signs of recovery, retesting the $3.14 support zone and bouncing cleanly off it. That's a key level to watch, and so far it's holding well. This kind of recovery after a panic event often signals strength and renewed accumulation. In my view, it's a good buy around the 3.2 area, and I've added SUI to my stack. Celestia has been in a brutal downtrend, printing consistent lower lows with little relief. It's still under distribution. Right now, I'm watching for a shift in that structure, specifically a bounce that reclaims 2.3 and holds it as support on a retest. That would mark a potential trend change and a safer entry zone. Until then, I'm staying on the sidelines and letting the chart prove strength first. I'm also keeping an eye on virtuals. If you're looking for exposure to AI agents, this one is definitely worth having on your radar. It already delivered a clean 500% move off the April lows, which shows clear relative strength. Coins like these that bounce hard during early reversals often lead the charge when the real run begins. Personally, I'm waiting for a pullback before getting in. I'm looking to bid somewhere around the $1.6 to $1.75 zone if the opportunity presents itself. Yes, the market has been choppy and many altcoins are down bad, but that's also where opportunity lies. Some undervalued alts are setting up for a quick bounce, and these conditions can offer solid flip trades if you know where to look. You can catch all our trades in real time along with valuable market insights on our socials. Make sure to join us there. Links are in the description. Thank you for watching, and I will see you in the next one.